Chartered engineer.
So good afternoon, friends. My name is Vaibhav and I'm a foreign trade student. So this next 40 minutes or 45 minutes, we have a vocational understanding of the trade. Since you are practicing exporters, we will look at the vocational aspects, that is the practical aspects of international trade. However, we'll spend time on various perspectives. Probably you have dealt with or not dealt with various provisions in relation with exports, mainly in view of merchant exports, right? So I made a small agenda kind of. This is a 5-point agenda, but it is not necessary that if you have any question, doubts in between, we can have a free discussion. And language is absolutely not at all an issue. Hindi, English, Marathi, Swedish, Germany, I understand. So language is absolutely not at all an issue. Feel free to ask more questions. And I know that there are many participants who are going to join online as well. So if IT supports, we can have question answers with respect to that also. That's okay? Of course, the delivery would be in English, but language, I mean, the communication perspective, questions you can ask in any language you prefer. I understand Gujarati also. Good. So, friends, we will have time we'll spend in these 4-5 areas where we'll first talk about certain basics and transactions. Little basics, and if you have questions, and imagine and it is termed as export. So basic definition of export is to take the goods outside from country India. Having said that, there is an important aspect from banking angle that the foreign currency, the foreign exchange has to be realized in 271. And as far as India is concerned, we support 20 foreign currencies. Worldwide, there are 104 currencies are there. In 193 countries, India supports 20 currencies, right? And out of these 20 currencies, now we know that many transactions to the tune of 18 countries, we have started with a rupee transaction as well. For example, Iran. Few slides is there on that. We spend time on that. But saying that there are two dimensions. Just taking goods outside country India is not export, but having realization in free foreign currency is that is an important point we need to remember, because many times it happens me as exporter takes the goods out, and because of some reason there is a part rejection or could be a full rejection, and I have already taken the road benefit, refund of duties and taxes on export product, or maybe on duty drawback I have availed certain rewards from the customs. So it is necessary to repay that benefit interest at the rate per annum. It is a requirement of the Customs Act 1962. Yeah? So, in view of this act, there are 4 or 5 acts you need to remember. You don't have to be mastering this act, but few important points you need to remember. That is, first is the Customs Act. And Customs do, as we know, only 2 things: assessment and examination. Assessment with respect to documents and examination with respect to goods. So, these are the 2 perspectives we need to look at from the customs perspective. Then you have Foreign Trade Development and Regulation Act, that is called FTDR. And under FTDR, country's foreign trade policy has been drafted by DGFT, right? So there are various aspects from foreign policy that a lot of incentives, benefits has been offered by the policy. The rules, regulation, do's, don'ts has been mentioned. As a exporter or as a merchant exporter, what types of exports are permitted? Like taking goods outside country India, we know is a physical export. But at the same time, supply of goods to special economic zone is also termed as physical export, even though you get the money in Indian rupees. So that is also coming under the foreign trade policy. And there are 2 additional export types policy has defined. One is called deemed export. You supply to something called export oriented unit, which is located within country India. It is termed as deemed exports. Or you as a trader, you supply to someone who is having a license in their hand. Name of this license is called advance authorization. So supply of goods to or through an advance license holder or APCG license holder is also termed as deemed exports. And being a deemed exporter, you are eligible to get all incentives, all rewards, all benefits under the Foreign Trade Development and Regulation Act, that is FTDR. Right? Third is with respect to FEMA angle, there are only 2 master directions I want you to look at, which anyway was one slide I have prepared. Related to export perspective, there is a master direction number 16, and related to import, there is a master direction number 17. I'll read you. Highly recommend take a printout of this master direction 16 and 17. If you are only into export, 16 only. If you are into both import and export, 16 as well as 17 respectively. And affixed or put in front of your desk. 16 and 17 are very, very important. Few provisions in that, like merchandise trade transaction. How can I open a warehouse overseas and through which I can carry out the transactions internationally? If the value of the invoice reduces, there are few queries I have received from the association, which we are going to discuss. But these are the 3-4 points from the queries. If I want to reduce the value of invoice, which I have already raised because of some reason, there is a dispute, there is a quality issue, etc. How can I do that? The answer is available in master direction number 16 related to exports. Then we have after foreign trade policy, we have UCPDC 600, that is Uniform Custom Practices and Documentary Credits 600, that is a standard. Friends, please note, this is with respect to LC operations, letter of credit. And as we know in international business, whether my name is manufacturer or exporter, or my name is merchant exporter, or my name is service exporter, in all these perspectives, LC is one of the terms of payment. There are only 4 terms of payments as prescribed by World Trade Organization, WTO. And these 4, one is advance payments. I can take advance 10%, 20%, or 90%, or 100% from the overseas buyer. That is advance. Number 2 is document against payments. It is movement of the documents, like you make the product or you purchase the product from local market, you load the products on the ship and ship starts from country India, let's say from port called JNCH, Jawaharlal Nehru Customs House. The goods starts from India, it goes for the buyer's country, but the documents get generated like a commercial invoice, a tax invoice, packing list, bill of lading, shipping bill. These are the documents you have to route through your AD bank. AD bank stands for Authorized Dealer Bank. And within 21 days, you have to submit these documents to the bank, requesting to forward it to the corresponding bank overseas. I'm so sorry.
Good afternoon, sir. We welcome you on behalf of all. So, the forum is yours. Are we audible to you, sir?
Yes. Good afternoon.
Good afternoon. Audible? Yeah.
Yes, good afternoon. Good afternoon to all.
Yeah, you're audible.
Okay. So I think this screen share, if it can be put down for a while.
Screen share.
It,
So I go again.
Yes.
So we are on the topic of export basics and transactions, and we are discussing about the terms of payment. Just to repeat, there are only 4 terms of payments, only 4. One is advance, like you can have an advance from the buyer to the tune of maybe 1% or maybe 90% or 100%. Second is document against payments, where you as exporter, you load the goods on the ship starts from JLCH, Mumbai, and let's say it goes to the buyer's place or country, and the documents get generated, and these documents are probably the invoice, that is tax invoice and commercial invoice and packing lease and bill of lading and the shipping fee, out of which you are supposed to submit tax invoice, the commercial invoice, along with the packing list and bill of lading to the bank, and bank will forward it to the corresponding bank overseas. And that bank, the buyer's bank, will intimate the buyer, and without taking the money, they will not hand over the documents to the buyer. This is how the movement of the goods or movement of the document transaction. And when the documents, the final documents called the title documents reaches to the buyer will submit to the shipping line agent, who will give the delivery order, and the buyer will clear the goods at the buyer's port. And that is how the movement of the transaction, and the name of this transaction is DP, document against payments. It is very good from the exporter point of view, but probably a little risky from the buyer's perspective. If the buyer is strong enough, he has more purchasing power, then he may go for a DA term, a document against acceptance. The process is the same. You as exporter generate the document, submit to the bank, and bank will forward to the buyer's bank. Buyer's bank will take an acknowledgement from the buyer. Only take an acknowledgement that the acceptance of liability, the buyer will give the acceptance of liability to your buyer's bank. And with that acceptance, they will clear the documents, submit to the shipping line agent, DO will be generated, delivery order will be submitted to the customs overseas, and the material will be cleared. So DA is little risky, which please note. D/A, document against acceptance, is little risky. Fourth one, the secure mechanism is under UCPDC 600, that is Uniform Custom Practices for Documented Credit 600. Is the name of the standard we need to know for 2-3 reasons. One is, while negotiating with the overseas buyer, the few articles the buyer may put, and the day you receive the LC, that's not a day for enjoying a party day, but it is the time to inspect, look at the all articles mentioned by the buyer. If it is not acceptable to you, you have to approach to the buyer before LC established. So few terminologies of LC we need to understand as an exporter. One is something of a beneficiary. Me as exporter, my name is beneficiary. My buyer's name is called applicant who apply for the LC. The buyer's bank is called issuing bank who issues the letter of credit. So these LC for process, there are 7 banks or 7 kind of parties are available. And these all parties are important, where one is called negotiating bank, one is called reimbursement bank, something called confirming bank, something called advising bank. These are going to play the important role, because for short period of time, this is an important point. For short period of time, each entity in this whole LC mechanism is the owner of the goods. If my name is the issuing bank, if I am holding the documents, which are the title documents, I am the owner of the goods. And because I am the owner of the goods, I know beforehand, I have every right to look into the LC document and make sure that it is in line with my company's or my bank's interest. I need to safeguard my interest. That is why I suggest certain changes. So LC undergoes amendment, and one fine day it becomes established. Established means the final LC, no amendments takes place, it becomes irrevocable in nature. And from banking perspective, there is a specific standard called ISBP 681, International Standard for Banking Practices. 681, very simple thing.
You need not have to worry that how can I know all these rules, regulations is very simple. Out of these all articles, there are only few articles are compulsory. These are mandatory and the quantity is not more than 9. So 9 articles are compulsory. So you need to know these 9 articles very precisely. Balance articles are optional, you can negotiate. So that is LC mechanism. As far as transactions, worldwide friends, there are only 4 transactions, commercial transactions. One is purchase, that is import. Second is sale or export, borrowing and lending. So we'll take up only 2-3 important transactions. One is purchase import perspective. There is something like, because I got a call from someone saying that, sir, please explain this import for export perspective as well. So there is a process like at the time of import, you file the bill of entry. Everyone knows that when the goods comes to India, you will file the bill of entry. And there are 3 types of bill of entry which I want you to look into. One is like when the goods comes to my country, JNCH4, I will file the bill of entry for home consumption. Pay the duty, clear the goods, that's all. But there is something called bond bill of entry, which is called warehouse bill of entry. Imagine the situation, the goods are coming from Tanzania, or maybe from Germany, or maybe from somewhere from Europe. And I need to export or re-export the same goods before or without payment of import duty. The mechanism is you have to file the bond bill of entry. Technically, legally, it is called in-bond, I-N-B-O-N-D, in-bond bill of entry. We'll file in-bond bill of entry. The goods will be, the liability will be created on your organization to pay the duty subsequently. So you clear the goods, but goods will not come in your manufacturing place or warehouse place or storage place. It remains at the customs station over there for maximum period of 6 months. Who says customs access? So filing inward bill of entry, the liability of payment of duty to only the liability of payment of duty, not going to pay actual import liability. So today is the day you file the inward bill of entry with the prevailing exchange rate and as per the rate of the duty on merits based on the HS code defined by you. And subsequently, maybe next month or next to next month or not more than 6 months, you can carry out export directly from that warehouse, filing a specific document called X bond. Since you have filed the inward bill of entry, now it is X bond. And since this is the export, it is for shipping. So at the time of import, you file inward bill of entry. At the time of filing the export, you file the X bond shipping bill. X bond shipping bill. No need to pay any import duty to government. That will safeguard your interest. Only warehousing charges you have to pay, which are very nominal. 1 point, and second is the risk to keep the goods at the premises being a pharmaceutical product. The contamination perspective, various other aspects you need to look at, taking the appropriate right insurance policy. Yeah. So these types of bill of entries are 3. One is home consumption, we talked about inbound bill of entry, inbound for export perspective. But tomorrow, if you import and you don't have to pay the money upfront, you find the inbound bill of entry, and then there is a scenario, many transactions you can think of. You find out the local buyer, you say, dear, I want to sell the goods to you. You go to the customs and clear the goods yourself. I want to shift, or I want to sell, or I want to hand over the title of the goods to you. So this is something called high C sale transaction. High C sale. So day 1, goods has arrived. Day 2, I'm just giving just to make it very clear and easy for you. Let's say day 1 the goods arrives. Day 2 you file the bill of entry called inbound bill of entry. Day 3 you make a tie-up with the local Indian buyer and you finalize a high C sale agreement, which is a tri-party agreement between you as an importer, your customer in India, and third is Indian customs. There are 3 parties. So it's a tri-party agreement. You can file post receipt of the goods as well, or before the goods arrives, 3 months before you can have high C sale agreement done, and you can register that agreement with the customs. Only point which you need to remember is in high C sale, the commission is very important, and that commission, if you don't inform to the customs that there is no commission involved in the high C sale process, custom is going to consider commission automatically 2.5% of your accessible value. And you all know accessible value in case of import is CIF, Mumbai, for example, cost insurance and freight. So it is very important in high C sale transaction. You have to mention the commission is there or not there. But if it is not there, you have specifically mentioned no commission is involved. Automatically, customs will not consider it, and bill of entry will be filed without commission. So first is that you file the bill of entry and you take it outside by finding it. One shipping bill, that is the first transaction. Second is file the bill of entry, find out the local buyer, and under high C sale transaction, you can sell the title of the goods and the buyer will come forward, he will clear the goods by paying the basic custom duty, social welfare surcharge and IGST automatically, and the title will be his name. And you can have a separate agreement with the buyer, ensuring and safeguarding your interest with respect to the outward remittance. Because in India, RBI perspective or bank perspective, there is a specific process which you need to remember under FEMA called IDPS and PDPS. Related to import, is import data processing and monitoring system, that is for import, and for export data processing and monitoring system. So these two processes you need to fulfill, because even though it is high C sale, the name of the importer, the bill of entry will be filed. If it is by you, there is a liability of payment of actual money on you. That outward remittance has to be from you, and the period is not more than 180 days. Who says FEMA? Master Direction 1660. So 180 days you need to carry out that payment. So this perspective of filing bill of entry, the third bill of entry is called ex-bond bill of entry. There is a scenario that you have brought the goods and you have not sufficient working capital with you. Money is not available with you to pay the duty to the Indian customs. You keep the goods in the customs warehouse for the duration not more than 6 months, and if need be, you can extend that 6 months also. Please note, you can extend also. And then later on, maybe 1 month, 2 months, 3 months later, you go back to the customer saying that, sir, you remember me? I have come for, I have filed the bill of entry. They will say, no, we don't remember you. Then you say, sir, I have come for, I filed the bill of entry for inbound bill of entry. Now I want to take out the goods. I am ready to pay the customs duty. So the duty liability would be finalized the day you file the bill of entry on that point of time at the prevailing rate, exchange rate, that point of time. So you clear the goods by filing a simple document called ex-bond bill of entry. So this is how the three perspectives, where import and export perspectives are possible. You may think of a situation, let's say you found out a supplier in Germany and a buyer in Japan. You found out a supplier in Germany and the buyer in Japan, or supplier in Japan and buyer in Korea, which are neighboring countries, right? So you will imagine a scenario that why should I bring the goods to India? Let me make a contract with the Korea-based supplier and ask him to give the delivery directly to Japan. Is it possible? Answer is yes. Answer is yes. Under which transaction? It is called MTT, and the full form is merchandise trade transaction. I repeat, merchandise trade transaction. But before making happen this whole transaction, there are few things you need to remember from policy point of view, from FEMA point of view, from customs point of view, yeah, and from risk point of view. And what are these points is the first from FEMA angle. The master direction says there is a purchase leg you are purchasing from Korea, and there is a sale leg that you are supplying or paying to or supplying the goods to Japan. So purchase leg and sale leg, or import leg and export leg, right? Legs. So since the normal situation says, if you are importer, how you will prove that you are importer? My name is authority, my name is customs. How you prove that you are importer? You have to have a proof of import. And what is that proof of import? Bill of entry. But now in our case, we are purchasing from Korea. The goods are not coming to India, so there is no question of filing bill of entry. So there is no bill of entry, that means there is no proof of import. So how do I recognize that is the import? If you come to me A1 form, application form as a banker, I will say file the A1 form, I will carry out output remittance. But there is no A1 form because there is no bill of entry. How can I see in my terminal EDI perspective, electronic data interchange? Your bill of entry is not there. So you have to make few things beforehand. You have to file a contract with the seller as well as buyer. You have to make a contract. And this contract will safeguard three things. One is the commercial aspects of the business. Second, financial angle of the business. Third is the legal aspect of the business. No book in India describes such kind of contract. With last 30 years of experience, I am facing these problems with many clients, and now I have made up mind that without contract, order should not be executed. You know, sir, we have received the export order, we have received the purchase order. That's enough. No, it's not enough. If everything goes well, perfect. But something goes wrong without contract, You cannot have a dispute with me and we can have a fight in international court of law if the contract is not there. So safeguarding your interest, safeguarding your supplier's interest, contract is must. Is there any format available for this? Answer is no. But there are few 10-20 points which is there in my presentation. You can get this information nicely printed. You don't require a lawyer as well. You have to make sure these points are complied. And what are those points? What is the terms of delivery? Who is seller? Who is buyer? Port of loading, port of discharge, terms of payments, exchange, which kind of foreign exchange you are going to have. Partly dollar, partly euro, partly lira. What is it? So those points needs to be looked into. Arbitration. If there is a dispute bind between the parties, who is the other party who is going to sort out, understand both the things and find out a golden mean for us? Arbitration. Arbitration agency should be part of the contract. And the last one is the jurisdiction. Where, if at all there is a dispute, where you are going to fight and which place? You will say being a Israel customer, you will come to say Tel Aviv. I will say, I don't want to come to Tel Aviv. Yeah. And I will say, sir, please come to Mumbai or India, and you would not probably like to come to Mumbai for fighting and sorting out the disputes. So, court or the legal jurisdiction is must in such kind of contracts. So, under MTD, merchandise trade transaction, you will submit or you will make an international contract with seller buyer as the case may be. Number two, the sales leg and purchase leg, the duration or the time, the gap between these two should not be more than 9 months. 9 months should not be, the maximum months. If you have a transaction like purchase is first and then the sale, purchase is first and then sale, but the credit perspective that you have to pay first to the supplier. The day you pay to the supplier, that is the first day, and within 9 months you are going to ensure that payment should come from the buyer in the same AD bank account, same AD bank, same authorized dealers bank. Yeah. And the pre-approval is necessary, so you have to give an intimation letter to the authorized bank. Sir, we are going to carry out transactions. Seller is me, but the is country Japan and the supplier is vendor is based in particular country. So this is how the transaction is placed. MGG. Because here no proof of import that is bill of entry, no proof of export that is shipping bill is going to generate. The bank will get only the information that is EFIC bank will generate, that is electronic forward foreign inward remittance certificate, like a payment advice, that they receive the money in the account and they are going to carry out an expenditure from the same account. There is no proof of import, no proof of export. So MTT is one of the purchase and import transactions. At the same time, there are processes like re-import and re-export from the purchase and export, both the perspective respectively. Like imagine a situation that you have carried out exports, 100 kgs or 100 metric tons, and 2 metric tons is problematic. The buyer has rejected. Now it is Herculean task to prove if at all you want to decide, or if you decide to bring it back. If at all you want to bring it back, then what would the scenario? But the Customs Act allows, there are notifications issued by the Customs 56 and 56 number under Circular 4 and 5 that you as an importer, now you are importers alone because the goods are going to come back. So you have to prove the customs the goods already exported by me, say last month or before that, this is my shipping bill number. These are the marks specifically mentioned on the invoice as well as on the shipping bill as well as on packing list. And the goods which has come to India now at the port, the same goods are there. So you have to substantiate. Substantiate means to prove. The modus or the whole responsibilities on you to justify and prove the same goods has come. Otherwise, customer will charge the import duty. So this re-import, re-export perspective is very important, but at the same time important. The other aspect is at the time of export, suppose you have taken the duty drawback benefit. The customer will credit this duty drawback not beyond 30 days time from the date of export or from the EO date, date export order date. And if this drawback has been credited in your account to the tune of rejection, say only 10% has been rejected, 10% drawback, you have to surrender. You have to say give it back to the customs. It is necessary. Okay? So this re-import re-export perspective, proportionate drawback, you have to give it to back. Or electronic cash register for roadtail benefit, refund of duties and taxes on the export product is kind of another reward. If you have taken that, you have to surrender that. So electronic credit register will be debited by the amount of the benefit which you have already attained. So that is perspective with respect to sale and purchase. PCFC and PCRS probably next session the expert will share with you. The interest equalization scheme being the exporter, especially the pharma exporter, you are eligible to get 2% to 3% interest subvention scheme, not for all the products. If you are a manufacturer, almost all, but if you're a trader, then there are around 416 line items are there where HS codes has been defined. If your product falls into that 460 list, yes, you are eligible to get the interest subvention. Meaning, each bank is having a prime lending rate. The best rate offered by the bank to their first class customer. Yeah, that's a prime lending
This
rate.
code is not applicable for MSME.
Oh,
If
yeah.
you are MSME holder and if you are registered as an MSME, despite of any access code, you are supposed to get a interest equalization.
Interest equalization. That is a subvention scheme. Master direction, the 1617 already we talked about, IDNS is one we talked about. There is a specific circular issued by the under the Reserve Bank of India called under the FEMA. External commercial borrowings, you can get access to the funds overseas and you can do through your AD bank. So that is with respect to access the LIBOR or Euribor perspective, that London interbank operating rate or the European interbank operating rate perspective, which is 0.5 plus your spread, the total will not be going up above 6% or 6.5%. So sometimes it is more beneficial instead of going with normal perspective. You can also have an access to external commercial borrowing. Project import and project export are the new guidelines the government that is customs has initiated, and these guidelines is perspective where you intend to take the complete plant. Suppose there is a plant, pharmaceutical plant in Europe, and you want to take this plant, you want to purchase the whole plant, the all equipment, instruments, and
तो लॉगिन सर को फोन करूं
so this project import and export perspective, imagine the situation that there is a plant available overseas and you want to completely purchase this plant. There are many equipments, instruments and technologies available, and various equipment instruments may fall under the various chapter headings. Different HS codes would be there. Something would be electronic products, something would be mechanical products, hydraulic, pneumatic, etc. And your bill of entry will be huge in that case. So instead, a single HS code the customer has defined, and the name of or number of that HS code is 9801. So you can register this scenario to the customs that I intend to buy one plant. The same time export perspective also. And under 9801, you take the registration, you file a bill of entry with line item number 1. And because of this HS code under project import, there is a huge saving in the import duty, which is to the tune of 3% to 7% or so. Yeah, there is substantial savings. Imagine a capex project of $100 million. The saving of 2% to 5% or 7% is substantial amount. And the process is not very hard process, it's a simple process. So project import export would be helping you. GR waiver, GR stands for guaranteed realization, is a process in FEMA where you imagine want to send a sample to the overseas customer. And the sample perspective, there is a free sample. You are not going to earn any money out of that. So you have to approach the AD bank and take the GR waiver and attach that GR waiver along with filing of the shipping bill. So your requirement to earn the money for doing exports will be waived off. No need to earn the money because it's a GR waiver supported by the exports. So otherwise, if you don't have a GR waiver, you will carry out the export for custom purpose. You will declare the value. That means this is the minimum amount you are going to earn, and then 2 years, 3 years later, the bank will give you a love letter saying that, sir, these exports has taken place, but there is no shipping bill is outstanding. So to sort out this kind of issue, you have a GR waiver or maybe a credit note. If you have carried out the exports and the money is not coming because of some reason, so you can always approach with the credit note perspective to the bank, and the PD payments angle would be taken care of. ISBP 681 we talked about, ECB 600 we taken about. Write-off is a process where a bank allows you, there is a specific provision in Master Direction. Again, you see I am referring Master Direction 16 for exports. This write-off process is there. But for that, you need to remember that the category of yours could be either export house or non-export house. Export house means you have achieved certain performance in last 3-year financial years to the tune of $3 million. If this is the amount of exports you have carried out, you fall under the category of star 1. If the performance is more, star 2, star 3, star 4, star 5, and total star 5. So 5 processes or 5 star performance has been prescribed by the DGFT. So you have to make the application nowadays, day before yesterday's notification. Now you don't have to apply and go to the DGFT. It is online process of star exports. Just submit the information. Even no need for chartered accountant certificate. You have to submit. The bank will automatically pick up the data from what you have filed the returns and pick the data from the export perspective, and they will award you on the date that if the last certificate is available to you on the next year, they will automatically grant you the certificate. So that is a new initiative DGFT has launched. So write-up process, whether your status is star export house or otherwise. If it is otherwise, then up to 5% self write-off is there. Self write-off is something, a process where you want to do write-off today. Today is a financial year called 23-24, right? So last year performance, whatever export you have carried out, last year exports into 5%. If there is outstanding, you can carry out the up to 5%. Yourself self write-off. If you are export house, up to 10%. And above 10%, it is ready back. The consultation with Reserve Bank of India, they will think of write-off processes. Change of buyer consignee is again a process available in the master direction. There is a scenario that the buyer says, sir, I have received your goods, thank you so much, but there is no need for me. Or buyer do not come forward for clearance of goods. What do you do? And probably imagine the situation, the goods are not possible to bring it back to India. If that is the case, that is the scenario, you can always find out another alternative buyer overseas. And by doing so, there is a change of buyer. Because earlier buyer or buyer 1, and now it is buyer 2 probably. So change of buyer, change of consignee is possible under the master direction. So these are the operational benefits what government has given to the FEMA, to the exporters. Not only to FEMA, but Customs Act and insurance perspective, the DGFT perspective, etc. EBRC and EFRC is a kind of a documents, like electronic bank realization certificate and electronic foreign inward remittance certificate. These are the certificates. When you receive money from the buyer partly in advance, you have to submit along with the purpose code to the bank. Say, sir, this money $100 has been received. The purpose code is so and so, and that information letter you will give along with the shipping bill details. So that will be a BRC, which will be generated by the bank automatically and available on the DGFT website. Advantage of this EBRC would be to use for making an application for any incentives, benefits you want to have, or reduce your export obligation under DGFT schemes like advance authorization, you might have heard, or EPCG scheme, export promotion capital boost. Users are, we are traders, we cannot avail the advance license or the EPCG license. So, is it right? Answer is no. Even if you are merchant exporter, you can also have the facility of advance license. So, what is advance license? It's a kind of incentive available by the DGFT under foreign trade policy to the exporters. So, exporters could be a manufacturer exporter, exporter could be a merchant exporter. If you yourself as a manufacturer exporter, you will say, sir, this is the raw material I want to import, or this is the inputs I want to import. I will process it in my manufacturing facility, make the finished good, and I will do the exports. So what you are going to give it to me as a manufacturer? DGFT says, we will give you duty-free import. No need to pay the duty. So what is the advantage for your interest on working capital estates? Right? Now, if you are a merchant, look at the provision in the law. If you are a merchant and you have a sign or tied up with the manufacturer exporter in India, you are also eligible to get the advance authorization. If you are tied up, if you are connected, if you are having a contract with the manufacturer exporter, on behalf of manufacturer exporter, you can also get the license, that is advance license for import duty free. That is an advantage, or that is a beauty of it. 18 countries we talked about for the rupee trade transactions. Purpose code also we talked about. Because when you say purpose code is a code designed and issued by the Reserve Bank of India perspective with a payment purpose that are prefixed. A payment purpose the prefix is S and receipt purpose the prefix is P. So S and P are the prefix depending on the type of transaction. And the type of transactions means there are only two transactions allowed from the accounting perspective. Standard accounting, either capital account transaction or current account transaction. So if you do capital account transaction related to purchase or sale, accordingly the prefix you are going to use. There is a big list is available with 4-digit codes are available. Probably next session we will talk about those different codes with you. The valuation angle is related to export. The custom valuation rules 2007 has been prescribed by the Indian Customs, and where the present market value needs to be declared by the exporter at the time of export. Present market value. And this value perspective, many exporters are not aware of, or they say to the CHS, decide kar lo, jo marzi hai wo dal do, koi to price dal do. But that is not the scenario. You have to spend little time on that, saying that how you have arrived at present market value, and there are three approaches the customs has defined in this customs act or customs manual. The approaches are something called market approach, income approach, and the cost approach. Very simple to understand. If I purchase a raw material or purchase the finished good being a trader, if I purchase at $100, that is my cost, purchase cost, or I can say acquisition cost. And all expenditure to bring that money or material to my end of my warehouse, suppose additional $10 has been spent out, so 100 will spend, so that is the total landed cost. And I decide to take a profit of 10% or 110, that is my sales price. So that is the cost perspective. Market perspective is something that value needs to be declared from market angle. So my selling price is $110, but market looking into the demand of a particular market, looking into the competition of that particular market, the price decided by me is, let's say, 210 instead of 110. So looking into the market, if your sales perspective is market is the main angle, then you can also give the present market value from the market angle. And third is the income perspective, which is normally absent for the pharma industries, but just for your academic interest, what is that particular asset is going to income for you for over a period of years? That is the income. That is absent from pharma perspective or chemical perspective. So this custom valuation is very important from the declaration angle. The shipping fee is not something that I declare the HS code description and the value per unit and total invoice value with GST or without GST. It is not up to that. But there are such a few things you need to remember, because tomorrow during the audit case, your case may be picked up and you have to face the losing. So to avoid this declaration is very important. As we know in trade, that is especially in exports, a lot of risks are there, a lot of compliances are required. And risk can be reduced by knowing first of all the risk. So measurement of risk and risk perspective, the one name comes in our mind is the insurance. And as you know, there are two types of risk, credit and non-credit risk. The non-credit is like we all know that if I load the goods on the ship and the ship sinks or there's a pollution or fire takes place, I take the marine policy. But what we need to know at this juncture is under this policy, which is called a non-credit risk, is called non-credit risk, where fire takes place, theft takes place, ship may sink, these are non-credit. So in this case, mainly the agents give any policies to us without looking into, we only see the premium, we only see that how best discount we can give or no claim bonus kind of things we insist, and in comparison with another insurance provider, what benefit you are going to give it to me, that is the only way of discussion or negotiation. But what we need to negotiate is on the ICC clause, international shipping perspective. ICC is the rules has been defined, and there are three areas: A, B, and C. ICC A clause, ICC B, and ICC C. ICC A is very high risk. If you are sending the goods nowadays, let's say Israel or to Israel, the risk is very high. So you should go and take the insurance from ICC A point of view. The premium will go up. But if there is no risk, if the buyer and the country and the journey, whether by air or sea or road or rail or anything, is very less risky, you can always insist for ICC. Your insurance premium will go down substantially, your transaction cost will come down, and your competitiveness will go up. So that is the risk perspective. And credit risk is mainly ECGC. When your product quality is fantastic, the buyer has received the quality, says, "Wow, quality is fantastic. Congratulations, thank you so much." You say, "Sir, what about my payments?" And he is denying the payments, giving any excuses, saying that there is a political risk, there is a war-like risk. I don't have sufficient foreign currency. So in that case, ECGC, Export Credit Guarantee Corporation, will help you. If you have that policy beforehand, then and pay the premium, and you have declared to ECGC saying that this is the situation, quality is no issue, but the buyer is giving this kind of excuses, to the tune of 98%, you get the amount back from the ECGC. 98%. So it's fantastic. And it is always beneficial to ask for the, especially for finding out the new customer. Let's say you found out the customer in Myanmar. It's the first time you are found out that customer. You go to ECGC, give the details about it, Myanmar customer to ECGC, they will run a credit rating. Amount is not more than 1,500 rupees. ECGC, by the way, is Government of India undertaking. You must be aware, right? So nearby ECGC office you go, it is in Churchgate itself, and carry out the credit rating checks. Amount is 1,500 rupees, and you scale of 1 to 5, let's say 4, 4.5, the risk is less. If it is the other side way, the risk is high. You yourself decide whether to it makes sense to supply the goods to Myanmar or otherwise. If the risk is high, you make sure to change the terms of payment. Yeah, something like that. Or take the policy anyways, because the quality you are sure. If they are not going to give you the payment, make sure, make the provision in LC, for example, make the article, mandatory article, define the quality beforehand, or incorporate export inspection beforehand. So export inspection perspective, which is a third party inspection, you have a report in your hand, the quality is problematic, no problematic, and hence you are eligible to get the payment to the tune of 98%. Yeah. So ECGC in risk perspective, factoring, forfeiting, probably we will check, but a factoring involves the business owners selling their pending invoices to third party in exchange of fast cash. In exchange of fast cash. And forfeiting is an arrangement in which the exporter can sell their receivables to a forfeiter to receive quick cash payments. Both are supported under Master Direction 16 under 10. Export documents we talked about, within 21 days from the BL date, you have to submit to the bank without fail. Bank then only can regularize the transaction. If there is a delay, based on the merits of the bank can look into for the settlement of all the regularization. Then there are organizations like most of you are aware of this, you are practicing exporters, like customs rules as a assessment and examination perspective under GST, that is when you carry out export, it is zero rated supplies. But as a GST rules and regulation perspective, you have always an option to export the goods with GST or without GST. And the fundamental difference between these, if in the trade transaction, in your looking into your books of accounts, if the input tax credit is substantially available in your books of account, it is advisable to export the goods, make a tax invoice with 18% as a GST, that is IGST. And when you file the shipping bill, please note, shipping bill itself acts as an application to get the refund of the GST. So the function mathematically works like this: 100 rupees is your tax invoice value, the basic amount. You add, let's say, 10% as the IGST. So total amount is 10% of 100 is 10. Total amount is 100 plus 10 is equal to 110. You file the tax invoice is 110. You make the commercial invoice for the basic amount, that is 100 rupees equal to so many dollars. And you file the shipping bill accordingly. When you file the shipping bill accordingly, the 10 rupees is the amount which is you are eligible to get it back from the GST, will be paid by Indian Customs, and then your next month's GST return will be made accordingly. So every day 5 o'clock there is a communication between the GST server and the customs server, and because of that communication, it takes care of this GST aspect automatically, and it is only the application route which was fantastically getting the trapped or blocked or unutilized your ITC GST utilized. PGFT, DCA and CBDT is something at government departments where you have a Director General Foreign Trade who makes the policy, issues lot of schemes to get advanced license or kind of ECG license, or earlier MES scheme was there. Now it has been stopped at merchandise export incentive scripts and related to softwares or related to soft services. The services has been given. DC is Development Commissioner, is a body who makes EOU and SEZs of the country.
बस ना परत जायचं रे
Insurance and ECGC, we talked about shipping company, freight forwarders, some agencies where you are will make the book the slot on the ships. Freight forwarders helps you to make the arrangements and find out the right channel. There are six major shipping lines as you know in whole world. Only six agencies are there. The suggestion here is to reduce the transaction cost is always find out not only the who is the best freight forwarder for me, whether that forwarder is an accredited agent of the shipping line. Accredited agent. Demand a certificate from your shipping line agent or the freight forwarder, whether you are accredited agent. The reason being, accredited agent give you the maximum discounts to you. Maximum discount. Little knowledge of geography you need to improve and say that which is the best way or route in order to move the goods. Sometimes it is always if it is not landlocked countries, then by sea it is always beneficial. But otherwise, multimodal operations like by sea, by air, partly by road, etc., can be thought of. But getting the goods from accredited agent is very essential in order to reduce the transaction cost. Chartered accountant certificate, chartered engineer certificates are essential in view of the giving a performance in the exporters or the government bonds for a particular scenario. Like last 3 years, financials you have to give along with the CA certificate or confirming the technical aspects or confirming and commenting on the HS code, which is normally an issue of 8% or 80% cases are always with respect to the wrong HS code or probably the confusions with respect to the HS code. But HS code is the only point what I want to suggest to the group because they are practicing. There is a generalized international rules. Make a note in your diary if you have GIR, generalized interpretative rules. If you just Google it, you'll get there are 3 rules. Rule number 1, rule number 2, rule number 3. Number 2 point is trade parlance theory. You just come on. The theory and all you don't need to read. Answer is no, but it's a simple theory where they say you have to look at the application of the product. Application of the product, let's say pharmaceutical product, and view of the application, what trade understands, that is your HS code. So, give a simple example, maybe not related to pharmaceutical or engineers or engineering aspects. You all know testers, right? Tester. So, what is the use of tester?
Check the power.
To check the current is available or not, right? But tester is also used for screwing and unscrewing. Do you agree? Yes. Imagine the case of import. My name is customs officer, and you say, sir, this is a tester, but you say this is a screwdriver. It's a mechanical device. If it is a tester, it's an electrical device. Electrical device attracts more duty in comparison with mechanical device. You may say this is a mechanical device as a screwdriver, but during the inspection, during the examination, I found a tester, and your name is Siemens. Whether you use for screwing and unscrewing, but because your name is Siemens, I will classify under tester. So application, there is trade parlance. The usage point of view is much more important. But first part is GIR, rule number 1, 2, 3. If his rules are very simple. Look at what trade understands this product, and you have to prove what trade understands this product. How you will prove? Through the pharmaceutical export promotion concept, through the kind of material safety data sheet perspective, through a note from the buyer that what is the purpose of this? Maybe a drug is coming, but the principal agent of drug is not a drug, it's an acid. So ADC is not applicable in that case. Yeah. So all this perspective comes under the HS angle, that is harmonized system of nomenclature. And please note, worldwide, only sync HS code is 8 digit in length, you know. And it's a numeric code, 8 digit, 85359090, 8 digit code. Worldwide, first 6 digits are universal, synchronized. Anywhere in the world you go, whether you go to Peru or Kenya or Canada, first 6 digits are common. Last 2 digits are country specific. So for exports, I will always prefer or I always give guidance to my clients that insist when you send the order, mention or when you make a commercial invoice, mention first 6 digit only in the commercial invoice. You never know what is the last 2 digit in the buyer's country. They can give a freedom to find the bill of entry over there, adding last 2 digits at the end of your first 6 digits. Yeah, but many times there is a confusion at the time of import also. You get a bill of entry, you get an import invoice with 8 digit code, and Indian customs says, sir, ये तो code है ही नहीं available. ये कहाँ से pick up किया? and then you spend 2 days, 4 days, 8 days, and go and talk to assistant commissioner or deputy commissioner or examiner and so on. And end of the day, whatever they say that please amend and cost of amendment you have to pay, you have lost the time, sometimes detention damage. Insist for the first 6 digits and file the bill of entry adding 2 last digits and in line with customs tariff. So 80% the Indian trade is facing problem with these edges, and related to that, the additional cost. So you can avoid that by adopting this GIR and trade finance perspective. These 2 things is just, it will take 2 minutes of yours, but it will solve a lot of problems of your trade. Digital signature and DSC providers is another agency. You have to take the DSC because nowadays a lot of applications are online applications. So for the digital signatures are must. Export Inspection Agency and Export Promotion Councils. There is a process you might be aware called REX registration, REX. Like India has signed 56 countries, the regional trade agreements or a preferential trade agreements. Already we have signed ASEAN kind of agreements are in place. Korea related SEPA policies are there. Yeah, exclusive policy for South Korea, Singapore, Sri Lanka, the policies are there. And now we have an advanced stage of discussion with 3-4 countries. One is Europe, second is UK. Israel is going on, but now it has kept on hold. And the last one is with Canada, that is also on hold because of the reasons. So, in view of these treaties, the certificate of origin and rules of origin are playing very important role. Your product, when you are to finalize a contract with overseas buyer, make sure that you know, is there any contract India has signed with them? And if yes, what is the kind of discount your buyer is going to get because he is purchasing goods from you from India? And to get the discount over there because of you, you have to provide the requisite document called certificate of origin. If it is developed nation, the whole world is divided into 3 types: developed, underdeveloped, and developing. If it is developed nation, GST certificate is must, and that has to be provided by Export Inspection Agency, EIA, that is short form. So EIA you have to approach beforehand, get the GST certificate, attach along with the commercial invoice and send it to the buyer. But if the buyer is from the developing nation or underdeveloped, you can provide the GST certificate, certificate of origin itself, but subsequently also from the Chamber of Commerce. Yeah. So that is perspective. Export promotion councils are basically to promote exports and to promote imports, arranging buyer seller meets, arranging exhibitions. They call you, you meet with the potential or would-be buyer sellers, meet kind of things. So that is export promotion councils. They give you a market access initiative kind of incentives nowadays, but I have not heard that really the disbursement has taken place. So no disbursement express. Only they provide you at a concessional rate, a place or space in the international market for the exhibition and kind of things. So like these, there are few departments: arbitration, court of law, we talked about, survey, loss assessment in case of insurance claim. If you are going to file, you have to approach this agency for settlement of the claims. Rewards, there are many rewards. There are only 2-3 slides. Rewards we already talked about, like advanced license. You can set up a license along with a form contract with the local manufacturer. You can get advanced license so that you can import duty free the inputs. Duty drawback. There are 2 drawbacks is under section 74, 75 and all industry rate. In normal scenario, when you purchase the goods from the local market and want to export, you can file the shipping bill under AIR, all industry rate, which is prescribed to the tune of 1% or 2% or 2.5%. There is a schedule available under AIR. It is available on the website for CBIC, Central Board of Indirect Taxes and Customs. No need to write these slides, which are available to you, so you can use these slides. Section 74 is basically if you have carried out import, assume scenario, you have carried out import, you have paid import duty, amount of import duty is 1 lakh rupee, the date of import is let's say 1st January 2023, and 8 days later you found that product is not suitable for you. What you will do? You will inform to the supplier, and supplier agrees that whether you send it back, we will take the goods and we will take care of the transport cost and insurance cost and whatever the additional costs are there. But what about the duty? 1 lakh rupee already you have paid. So you have to file the shipping bill under section 74 and get this 1 lakh rupee back in proportionate manner. from the Indian customs. What I mean by proportionate manner is if the date of import and date of export, the timeline or the gap is not beyond 3 months, you get 98% back, only loss of 2%. From 6 months to probably 1 year, there is a loss of 5%. After that, loss of 50, 20, like this. 3 years is the maximum time you can carry out a transaction under section 74. And third year, last day, 50% you get back. After third year, after 3 years, 0 days. And section 75 is you have imported something, you have used this and prepared something else. And after preparing something else, as the intermediate product, you found that this intermediate product is not perfect because of quality issue of raw material itself. And that supplier has agreed. Under section 75, you can take it back and get a duty benefit as under section 74. So beautiful provision in Customs Act. Very few people are not aware. Very few people are probably are aware of this, and probably very few actually take the benefits. So it's good provision under section 74-75. Road check, when we talked about, is an electronic credit. You don't get a cash point from the government. ABS, ACS are the old schemes. However, you can get these schemes at a discount rate from the market. You can still use these schemes to offset your import duty at the time of import. Re-export, re-import we talked about, rules of origin we talked about. As a merchant exporter, maybe you are aware that you can purchase the goods from the local market just paying 0.1% GST. Instead of paying the full amount of duty, just pay 0.1% GST, because the goods you will purchase from the manufacturer locally in India for export purpose, you will make bill to ship to kind of arrangement where you will ask the manufacturer, please bill it to me and ship directly to the port. And if that happens, then 0.1% GST is the only GST you have to pay. He will charge you probably on the invoice. And again, ITC is available on this 0.1%. Input tax credit is available. PLI PSI is basically scheme that is productivity linked incentives is mainly for the manufacturers, or package scheme of incentive is for manufacturers, stakeholder we talked about. Duty waiver is also a scheme where it is available for the manufacturers, so we must spend time. Income tax reduction, no need to pay income tax for period 5 years, is for ACZs. Again, it is for merchant also. If anyone is from the ACZ by any chance, you need in ACZ? Nobody can think of doing same operation of yours, entering into a special economic zone. It could be a multi-product special economic zone, and you can get the income tax waiver, reduction. No need to pay the income tax to the tune of 34% also. Under the scheme, there is a specific section 10A, 10AA, and 10B. First 5 years. However, minimum alternate tax and dividend distribution tax is applicable if you pay the dividend, but that is on the book profits. GST refund we talked about. Move is something for the manufacturing and other operations in warehouse. EFC, the exchange under foreign currency, is a kind of facility provided by the bank, like it's a kind of declaration you give it to the bank saying that you want EFC facility on top of the current account. It is something like that. Imagine the situation, being exporter, you earn the foreign currency, let's say $100. Hypothetically, this example. And $100 will be converted into Indian rupees by the bank. And next day you want to pay to the overseas supplier, the amount is $50. These Indian rupees converted yesterday will be again converted into foreign currency, and the amount will be credited, amount will be paid, output remittance will be to the suppliers. So instead you can have the EFC facility to give the money received credited in dollar format only, so that the exchange loss or the loss because of this conversion will be saved. So that is EFC. Escrow is a kind of an arrangement with the bank that if a particular condition gets fulfilled, like LC. LC is nothing but a bank guarantee, but there is a condition associated, that is LC. So if the condition fulfills, then only payment is going to be taken care. So same situation here in escrow, if the condition fulfills, then only the bank will release that amount to the beneficiary. Escrow perspective. About Euribor and all we talked about. Clauses LC, that there is something called new thing called red clause and green clause in letter of credit, where you get a concession, the amount you get from the bank. If it is a red clause LC, to the tune of 25%. Your buyer is very sure about the quality and the delivery of the product and timely delivery aspect of the whole process. You can get 25% straight away get discounted from the bank. If it is green, you get to the tune of 75% amount from the bank. If it is green cross net profit. 3 points. You will check their next slides. Factory stuffing is a kind of permission also you can get if to avoid the losses or to avoid the or reduce the transaction costing. AEOs, that is authorized economic operator, as a trader also can be available to get that there are 3 certifications, T1, T2, T3. TN is basically for logistic operators. So if you are AEO, then no consignment will be stopped by the customs. It is RMSC, that is risk monitoring system that the new division in the customs has started. If the product, there is a risk associated with the product is very less based on the documentation provided by you, based on so many years you are in the business, and there is no adverse case, no show cause has been come to your place, to you or your organization. Product also the risk is less, it is not hazardous product, and foreign trade policy also is general policy for your product. You may get T1 certificate from the customs. And what does it mean? It means that without verification, without examination, your goods will be cleared off. So cost of clearance will reduce drastically in AEO if you are AEO certified. If you are T2, the bank guarantee requirement will be waived off. No need to use the bank guarantee at the time of import. SVB is special valuation branch. If you as exporter has a tie-up with someone called overseas supplier, and if you are importing from the related party, imagine the principal company name is buyer, and your company is buyer India, and principal company is buyer Germany. So buyer Germany is supplying goods to buyer India. So they are related parties, principal and subsidiary companies. So because of relation, the custom will not trust on the value declared by you at the time of import. So you have to comply for IR, that is investigation report, which is the job of special valuation branch in Indian customs. Yeah, and exactly opposite from income tax point of view is transfer pricing. You have to have audit from your chartered accountant and the transfer pricing perspective. Cost sheet is one where I always suggest, being a cost accountant also, every exporter should have the cost sheet available. Means if I want to export, let's say, to a country called Poland, then the cost of purchase, that is a total purchase perspective, the landed cost I should have. At the same time, I should know what is my loading cost, what is my unloading cost, what is my custom clearance cost, what is the port cost, any levy I have to do, any charges I have to pay at the Indian customs or the buyer's customs perspective. So depending upon the terms of delivery you set in the contract, whether it is FOB or DDP or CAP or CAT or kind of DDU, any import term you set in the contract decides 2 things, the risk and cost. So because it is cost, you need to know that country specific, I have this cost sheet for Poland, cost sheet for Germany, cost sheet for Tanzania, etc. Knowing this becomes very easy, it's a handy tool for you to give fast a quote to the buyer if you get an inquiry from, let's say, these countries. So cost sheet is going to help you a lot. Whether the preferential trade agreement is applicable, if yes, what benefit I can pass it out to the buyer, against which documents, against which information. So those information will be available to you. You can prepare a cost sheet. It becomes easy for you to prepare the quote. Provisions, we talked about physical exports, deemed exports, third-party exports, GST perspective, we talked about point 1, we talked about various registrations that import-export code is from the DGFT angle, which is nothing but a PAN, is your REC, export registration, GST registrations, RCMC and all. SCOMET is where you have special, the full form is special chemicals, organisms, material and technologies, material equipment and technologies. So if the product has multiple applications, imagine your product has multiple applications, and if it is falls under the list prepared by the Indian customs, you have to take a SCOMET license from the DGFT headquarters. So SCOMET is something which is very important. For example, the material is say graphite. So if your product is made out of graphite falls under SCOMET. You need to have a special license from the DGFT Delhi for the SCOMET. Next registration we talked about. Few documents, as you know, that For exporter or merchant exporter tax invoice, that is the GST invoice. Commercial invoice will be made in the foreign currency. Packing list will talk about the dimensions, weight, net weight, air weight, etc. Shipping bill, the types of shipping bill. If you wish no export benefit from the government of India, you find the shipping bill called free shipping bill. Else, you can find the DEC, duty entitlement, eligibility certificate, or maybe a drawback shipping bill. Then your certificate of origin, we talked about, depending upon the treaty, preferential trade or regional trade agreements with the buyer's country. Certificate of analysis, material safety data sheet talks about all information, materials perspective, the safety perspective, usage perspective, in case of handling, what will happen, etc. Pamphlets, brochures, contracts, contract we talked about the three angle, that's a commercial, financial, and legal angle we need to safeguard in the contracts. Bill of lading is a transport document used in case of sea movement. Airway is by air, and if the transaction is through rail, it is rail receipt. If it is by road, it is road receipt. GR waiver is from the bank. If there is no money you are going to get from the buyer, it's the free of cost supply in case of sample or you want to participate in exhibition. You will take the material for the exhibition, so GR waiver needs to be taken from the bank. Bonds and bank guarantees. Bank guarantee is a guarantee issued by the bank on behalf of you to the, let's say, to the customs. And bond is non-tangible or intangible kind of instrument where on behalf of the President of India you give a bond, you execute a bond or general bond or B1 bond or B17 bond to the customs. So tomorrow if there is a deviation from the import point of view or export point of view, then customs may take you to the court of law. So bonds has to be. There is a bond debit and credit department available in the bank. There is a bond monitoring mechanism is available in the customs. CA certificate, CA certificate, valuation certificate we talked about, PFS we talked about. So please feel free to ask the questions. Yes. Please use mic so that
I have a almost 80-year-old problem with DGFT.
okay.
There is a buyer. There is a buyer who gave me an order, conditional order. He also has a factory in China.
Okay.
Where he manufactures raw material. So he said that you buy the raw material from me in China, import it into India, convert it into injections. Yeah. I approached my banker, AD. They said that this is possible. I wrote them a letter that this is how the transaction will happen. I will import raw material for which I will not pay. I will export finished goods for which you will pay me after deducting the import value. Or this is how the transaction will happen. We agreed. We did the transaction. The bill of entry was submitted to the bank. Where in the covering letter for my import, where in the covering letter I mentioned that this I am not going to pay. I'm going to export goods and finished goods I receive less to this extent. All this was done. BRC was issued. I thought that the transaction is closed. PGFT sent me a notice saying that why have you not paid for this import?
No.
So I explained the entire transaction to them. They didn't revert. After 3 years, some team from Delhi visited Mumbai to sort out old complaints. 3 times this team has come in the last 8 years. All 3 times they have launched it, submitted my case. They were surprised that this is still pending with the DGFT office. But they come for a couple of days, 3 days, 4 days and go.
Okay.
Here nothing happens.
Okay.
Finally, the last time they came, I approached the DGFT office.
Okay.
Gave him writing. He also was surprised that this is still hanging fire. After that, I am now sending them reminders. They are not responding. They are accepting the reminders. I have the acknowledgement. Nothing happens. How do I close this case?
Simple question. Everyone has understood?
Yeah.
Solution will go like this. We will not integrate your diary if you want it. Number 1 is, as far as customers now here, so many acts are coming. So we have to sort out this issue one by one. This whole scenario, appreciate, this is a contract manufacturing, sir, correct?
Yes.
It's a contract manufacturing. And under contract manufacturing, there is a SOP has been designed by me, it is available in my books. Step 1. In such scenario, Now it has happened in your case. Suppose you want to do it to how you will do it. The bill of entry or before filing bill of entry, you will make a contract with the overseas supplier saying that you are going to supply me the goods free of cost. That is to mention in the contract. Please note in chapter 2 of Foreign Trade Policy issued under Foreign Trade Development and Regulation Act, there is a provision customer supplied free products. Make a note in your diary. Customer supplied free products. You have to use exactly same wording in your contract saying that the customer never supply the products, right? Customer accepts the product or buy the product. But our case, customer supplied free products should be the heading of my contract. Government understands that only. Customer supplied free products. Now they will understand. So that is contract. At the time of filing bill of entry, then you put the description. There is a specific character length available in EDI, Electronic Data Interchange, made by the DGCS, Director General Commercial Intelligence and Statistics. 180 characters. What you mention, name of the product. Suppose your product name is bottle, for example. In bracket you write FOC supply. It is must. The moment it is FOC supply, me as a banker, I come to know that this supply is free of cost. IDMS perspective is not there, along with or supported by a contract. Supported by the contract. So your bank and RBI perspective is zero. Look at custom point of view. Custom will never question because it's a declaration, it's a bill of entry, it's a declaration. Even if my name is Deputy Commissioner, I will say, sir, why you have written free of cost? You will show me the contract signed by both the parties. Correct? Along with the witness. Is the format confirmed by the government? Any government? Answer is no. So whatever format you choose, but it should look as a contract. That is the only condition. So custom angle has rule. And DGFT angle, chapter 2 talks about customer supplied free products. DGFT never ever will raise the question to you.
That is for the future.
That is for the future. But past the problem is or challenge is bill of entry is not amended. But make a note, section 149 of Customs Act. So this section is very critical. Please understand. Section wording is very simple. Section says the day you file the bill of entry, whatever the conditions present at the day of filing bill of entry, if we convince, if there is a merit in the case, we will amend the bill of entry. So on the day when you file the bill of entry, was there a treaty? Was there an agreement bind between the parties that he will supply you the free of cost?
No, the agreement was that I will not pay.
Yeah, that means it is
The
available.
value was there,
But whether that communication was verbal or in writing?
no, in writing, supported by
So what is that document? You have to provide to the customs and simply submit a letter. Heading of that letter, provisions under 149 custom section under 149 for amendment of bill of entry. And you yourself prove that on the date of bill of entry was, let's say, 1st January 2022. Down that day or previous to that day, the agreement has been signed between the parties that I am not going to pay. This fact was there. However, I am unable to mention on the bill of entry, kindly amend. Your job is only that. You just mention it, take the acknowledgement.
But after 8 years, they will do it.
3 years is the
8-year-old matter.
No.
So,
ये meeting 3 साल पहले होना चाहिए था.
so the bank has released the BRC because of this. Otherwise, how will they release? I have received short money. My export is for 100 rupees. I have
3
received
years.
only 30
3 years is the duration for amendment of
That is precisely my point. So what do I do now?
So you submit a letter to the DG Customs under 149, knowing that the timeline has crossed. But submission of letter and getting acknowledgement, there is no problem.
Yeah.
You get an acknowledgement. You build the case. Tomorrow after the issue comes, you say, I have already done. I am not aware of 3 years duration. But that was the information I got very recently, so I have fine. Customer supplied free product and wording has to be there in your letter. Please note that. Any other question?
Do you have a list? Do you have a list? Sorry.
Online questions we have listed, we have submitted the questions earlier online.
I have replied. easy.
We can discuss here because that question.
We have a list of countries where we have rupee transaction now.
Country list 180.
We have a list.
List is there in the presentation. You see?
Can you explain something about this LUT, non-LUT? Because my GST agent is not recommending.
One second. 18 countries include Sri Lanka, Singapore, Iran, UAE, Japan, South African countries.
There's not a precise list of it.
We detail it because the time allotted was only 30 minutes, so I thought what all things we have to incorporate. And this
Yeah,
LUT.
so LUT and non-LUT. So he's saying automatic process is better. We don't interface, you pay full GST, don't give LUT, and then I'm getting that back. And second, he says that point one, the plant, the manufacturer is not supporting because they said you have to maintain a lot of documents, so you pay full GST. So these are two kind of related things.
See, scenario one has to look at is a commercial perspective. Today is the day I want to export. And I have option in front of me to file the tax invoice with GST or without GST. The moment I say without GST, I have to submit a document to the customs called LUT, legal undertaking. LUT has to be opened with the GST office free of cost on the first year or any day which you feel that I want to file the LUT application, you will get free of cost LUT from the GST department with a specific unique identification code. That code you have to put in your tax invoice and of course the shipping bill if you want to export without GST. This is not when you say GST, it is IGST because international business you have to have IGST. Now, how do I decide whether I should add GST or not? So I have to ask the question to myself in my books of accounts, what is that amount accumulated in the GST form? If the amount is substantial and I don't have any option to sell the product in the local market because I am exclusive exporter, it is but natural for me to make the tax invoice with GST. For simple reason is by doing so, I will find the shipping bill accordingly that I am exporting with GST, and because I find the shipping bill with GST, that becomes an application to get the GST refund automatically, not months from the date of export. So that is accumulation and utilization perspective. Correct? So in view of this, your question is LUT is not recommended.
So he's saying that if you put LUT for then we have to do a lot of paperwork. If you pay GST for supply, but not for your export.
So I mean it's simple. If at the time of export, if you carry out export under legal undertaking, and if there is no local transaction, sale transaction, I'm assuming, or maybe percentage very less, 80% export, 20% local. So doing local sale, the tool is not sufficient to get that GST back, and your GST accumulation will go up and up. That is losing your working capital. So one has to make the simple calculation by doing export. Am I helping myself to reduce the working capital liability? The answer is yes, well and good. You carry out export under LUT. But if there is a scenario that I can reduce that working capital or GST angle by doing export with GST, it is always better and it works fantastic.
Like that's what we are doing.
Yes. Okay. So purpose code we talked about, there are 4-5 points, questions has come. GST perspective we talked about, and TDS is the angle related to export of material. TDS is not applicable. But TDS perspective, which is also from perspective from the withholding tax, it comes with the services point of view. Imagine you want to pay a commission to the commission agent overseas in case of exports. Withholding tax is the tax, that is the TDS, tax deducted tax source, is applicable. How much it is applicable? It depends on the type of transaction, whether it is of commission, whether it is a perspective rate, whether it is a perspective where you have to pay the salary to your overseas employee which you have recruited over there, whether you want to pay the salary. So all that perspective, TDS rates has been defined by the income tax authority. Then it was how to close bills with third party payment whose name does not reflect in the shipping bill. So I assume the scenario as you have filed the shipping bill. The shipping bill when you have filed, the buyer's name has been mentioned. and you are not getting the payment from the buyer. Isn't it so?
Correct, correct.
So if the money is not coming from perspective of not your side, bank is going to chase you. What will happen to this kind of payments? The timeline is 271 days. That is 9 months. If your name is export oriented unit, the timeline is 365 days, right? And if it is a consignment export perspective, the timeline is 15 months. But in spite of your continuous follow up, if the money is not coming, the only option remains in your hand is write off. Write off we talked about. There are three scenarios: 5%, 10%, and more than 10%.
It's a third party payment.
The payment is coming.
Third party payment.
You need to
When
make a
buyers-
contract. You need to make a contract. Tri-party contract.
After there's a defaulted or whatever, there is some intermediary.
Okay. So there is correction, there is a change of buyer facilities available. So in shipping deal, you have mentioned, imagine a buyer name is A, and you are going to get a payment from B, another party.
That's the question.
And this B is not mentioned in the shipping bill, so me as a authorized dealer, how do I recognize that payment? I cannot consider, even in spite of your request to offset against payment A, that is not in my hand. But change of buyer facility is available, and the change of buyer facility you have to exercise by having a contract with you. You have to provide the merits to me, then only change of buyer is going to take place. And then only settlement takes place, and then only the pending EDF income.
We about the because many of our members they pay inspection fees basically to foreign regulators. There are different market promotional fees as different fees are there. So general understanding with the members is TDS is applicable if it is only a service is TDS or TCI having a RCM of GST is applicable if that service is only in India.
No. So I tell you, outward remittance is connected with import. That you agree? Outward remittance is connected with import. Now, what are the options in your hand for import? Only two things: import of goods, import of services. Import of goods to do outward remittance, TDS applicability is absent. There's no need to pay TDS. First one. Number two is if you are importing services, then the importing services has two again angles. One is from direct tax, second is indirect tax. Direct tax perspective is TDS. The withholding tax, name is of withholding tax. And second is the indirect tax, that is GST. So GST perspective, reverse charge mechanism is there. RCM, reverse charge mechanism. Considering, had it been the scenario that if you are purchasing or importing these services, instead of import, you are purchasing service from the local market. Suppose the person's name is commission agent. If you have taken the commission agent, appointed commission agent locally, what is the amount of GST you would have paid? Same amount of GST you are going to have under RCM mechanism. And the direct tax provision, as I told you, TDS angle. Now, going into the JEF, you need to classify, you need to mention who are those overseas supplier who has given you the service. Answer is, sir, he is my employee itself. I want to pay him the salary. He is my commission agent. I want to pay commission to him as per the contract. Number three, he is a freight forwarder international. He is an insurance agent or broker overseas. And other than this, anyone else where I want to repatriate the money overseas. So under these five categories, depending upon the country, depending upon type of service, the different categories of percentages they are ranging from 10% to 40%.
So that's what members want to understand. If you can give, because today time is very less.
No, but
One
if
is
background if you know, then probably you can freeze or you can
so
make up the questions more
no,
systematic.
what I will request you to make one writer on this special and see, because what we understand tax or TDS is not applicable. So many members don't understand, and these questions have been bombarded to us as a responsible association. And for exporters, pharma exporters, FPM is the only exporters association. All there are export promotion councils. And export promotion council, you only said that how they are working. So no need to talk about that. So
I will send it to you, you can forward it.
yeah, I will request, we have a bulletin in it, we will publish now bulletin.
Question is, AD Bank can charge any penalty on non-disclosure of shipping bills and advance not utilized for long time. Probably comment once the session starts.
Okay.
Expense made on behalf of overseas client in India under which purpose code? So code number you want, right? So probably we have to open the list and then I can guide you. Expenditure. What a code is available?
So basically, the question is that.
Hello.
Yeah, basically the question is that if expenses on behalf of the party has been made locally, right? Now, how that has to be received from the buyer? Because it won't be billed to him, but the expenses are legal.
But whether is there a contract available?
No contracts are available.
Then that has to be there. Otherwise, how do you want me as a AD to regularize that amount?
That payment has to be declared and
So the contract has to be there. Purpose code comes second.
It's like as if right now on behalf of I'm paying the payment because it's an urgent thing, you know. Because the
But
card
even if you make the payment urgently, subsequently you can have a kind of contract and email understanding is also sufficient.
Okay.
But that has to be there. Through that email correspondence,
Yes.
one can come to know under which heading it will fall.
Okay.
Because purpose code has different perspectives, no?
Okay.
But there's so sales as a current account transaction, but under current, what are the perspectives that we need to look at? Purpose code is there.
Okay. And then it will get a GST on it.
See, as I mentioned to you, import of services.
Right.
Import of services, the reverse stamp is there.
No, this is export.
Export of
This is export of
This export of services, GST is not.
Okay.
But no. GST is applicable. You have to show the GST, but at a nil, zero rated.
Zero rated.
You have to file GST 1, you have to file this. Yeah, it's not in expenses, as an export of services.
Next question is related to Iran. How bank can help for the Iran transactions? Tarji, you will talk about this Iran. Any other question?
Yeah.
Ask. Yes, sir.
I want to ask about right of procedure. As per the right of procedure, it says, previous calendar year. But some of the documents of the pending since last 3 years, 4 years before. Okay. We are not getting the payment. So what should we do for the right of procedure for like, for that period
See, there are
of
3 years, suppose. Year 1 there is a pendency, year 2 also you want to do write off, year 3 also you want to write off.
For the right of procedure, it's a, previous calendar year.
Okay.
Then to December.
I assume that you have a write off procedure to carry out for 3 years. All 3 years there is a write off procedure is required for your operation. 3 years. Okay. So you have to select the first year, the right first year. So that year you are going to write off today. You are going to write off today. So as far as the scenario and legal interpretation is, then you are going to write off in particular year, you have to consider the previous years performance and 5% of that if you want to do the write off under same write off process. So write off year period is very important. You cannot say that I want to write off for a particular year, but then write off period when you are going to do the write off today. So today financial year or calendar year you are going to consider. You got it?
मेरा क्वेश्चन क्या था कि जैसे मतलब कि मेरे को आज राइट ऑफ करना है, ठीक है?
आज राइट ऑफ करना है आपको, तो पिछले वाला
डॉक्यूमेंट है मेरा 3 साल पहले का सपोज, तो मैं कौन सा ईयर कंसीडर करूं कि मैं वो राइट ऑफ करने के लिए
प्रीवियस ईयर
ट्रांजैक्शन मेरा जो मैं एक्सपोर्ट का टर्नओवर दिखाऊंगा, एक्सपोर्ट का इनवेस्ट अमाउंट दिखाऊंगा, वो किस ईयर का मतलब प्रीवियस ईयर का दिखाना पड़ेगा.
करेक्ट.
Then I can write off 3 or 4 years before document, right?
Yes.
Is it allowed?
Yes.
Okay.
Only you have to compute the percentage. Get it certified from your chartered accountant. If it is below 5%, self write off. If it is more than that, if you start export up to 10. Above 10, it is bank only.
And one more question about section 74. If I import the goods from other countries, okay, and I am to export like I import it my country, okay, and this time I am to export it after 6 months, yeah, 1 year after. So in third country, so can I get the duty? Can I file the document in section 74?
See, section 74, there are a few things we need to remember. Number one is,
As per your comment, okay, you are saying re-export in the same country, right?
so,
So,
Section
my
74.
question is like, I am actually in third country.
section 74 says that to become eligible for section 74, condition number one, you have to prove that you have imported these goods. So what do you submit the bill of entry? Sir, look at my name, it is available on the bill of entries. That means I have imported the goods, right? Number one. Number two, what you have imported and today what you are exporting, whether it is same, then you have to prove. No, that you are saying, but customer has to approve. Who will help you is a chartered engineer. Which chartered engineer who is empaneled with that customs house. He will confirm that yes, the imported good was fan and today also you are exporting fan. It is the same fan. Based on serial number, model number, make, etc. etc. Right? Number two. Number three is whether any changes has been made in the imported product till date. Today you are going to export. So till date changes has been carried out. If answer is no, then only you are eligible under section 74. Now it is up to you. Now you are imported from Germany. Now you want to export to China, for example. So question is from me as customs authority that what is it like? Why you want to send it back because of rejection? So you should reject and send it to Germany. As simple as that. Now you say, sir, I want to send it to Japan or some other country. So you have to have an understanding, a contract, or maybe an understanding with the overseas supplier that rejection is acceptable to me. However, you supply to our China factory, etc. So that communication has to be there. And last and very important, since this is the export, though it is re-export, section 74, you are not going to earn any money out of that. So you have to get a certificate from the bank or under GR waiver. So these 440 points helps you to do the clearance under section 74.
Yeah. Some of the documents I have pending since last, 2010, 2012 and 2012. Okay. At that time, we don't know how we submit the documents or there is no any regulations guidelines of
No regulations there.
might be
It is there. It is there in the customs.
So
This is section 74, specific section. So
no, I'm talking about different topics.
We'll have to cut down the questions because we got two other speakers and we are running short of time. So I would suggest that when we have a break or in between, when we have time towards the end, we'll take up the questions. Okay, because there are two more speakers waiting and we are running short of time. So there is a time limit here also. So I just thought if there are any further questions, you can also write it down. We will get the answers for you directly later. You can just send it to us also. Okay, thank you.
Thank you, sir.
Simple. Thank you, Mr. Vaibhav. It was a wonderful discussion.
Thank you, Mr. Vaibhav. We look forward to work you as an advisory and additional part of FPME in the long run. Many of the, as you are a chartered engineer, many of our members, we have pharma and allied product merchant exporters, where allied products also has medical devices. So in case of any medical devices, import, export, your services as a chartered engineer will be always welcome.
Yeah, thank you, Mr. Vaibhav. Now, I would like to invite Mr. Rupesh.
This was from the Indian Forest Trade Bank of Maharashtra.
So we understand the possibility of time now can be an issue. So I'll try to take as less time as possible and meet the timelines. To start with, we thank Pharma and Elite, Federation of Pharma and Elite Merchant Exporters, and your team
for giving us this opportunity to interact with your members and all those participants who are online as well. So we have many things alike, sir. Like you have started your this thing institution, this organization in 19, right? So since till 19, Bank of Maharashtra was just cruising along. But after 19, when we had our board of directors being changed, we have taken a fast track sort of thing. And the records are there, sir, for the past 3 to 5 years on a quarter-on-quarter basis. Bank of Maharashtra has been the fastest growing PSU, not only PSU, but bank among all the India. So we are having some similarities. So this presentation will like to be interactive. There would be some side would be a repetition. I would like to skip them as well. And मुझे आप लोगों से सुनने में ज़्यादा interest रहेगा. Anything you which we feel that your present banker is not giving or we are expecting from a banker, we would like to take this into our stride and we will like to give a solution to that. तो हम लोग इसको इंटरैक्टिव ज्यादा बनाएंगे ना कि मोनोटोनी मैं प्रेजेंटेशन बोल रहा हूँ और आप लोग सुन रहे हो. ऑलरेडी थोड़ा हैवी सेशन हो गया है सर का. So why export? Why Bank of Maharashtra is after export and why Government of India is giving so much of trust to that? So during this budget session as well, there has been huge trust in the export part from the Government of India, and in this Amrit Kaal also they are coming up with many n number of incentives, n number of initiatives to give us to the exporters, and they were not necessarily pharma, but all the manufacturers, all the merchant exporters in India. So we plan to grow by 21% the manufacturing. We want to go to trillion, so to say, by 2030, as far as the Ministry of Commerce is concerned. So various initiatives that has been taken by Government of India. To name a few, we have district as export hub, town of export excellences. Then in the foreign trade policy, which has been recently updated in 2023, which I'll be discussing in details. What they have done, they have tried to bring in digitalization into their foray. Earlier, where things were taking say 15 odd days for giving a sanction, now it has been digitalized and it takes hardly 2 to 3 minutes in some cases. This I was already talking of. We want to make rupee as a global currency. Hence, we want to increase our exports, and then only it would be a case. Like for export EOU, export-oriented units. Earlier, whatever was the timeline, whatever was the turnover criteria, we have reduced it to. Government of India has reduced it by almost 15%. पहले आपका अगर स्टार एक्सपोर्टर बनना पड़ता था, you have to have around 50 million turnover, which have come down drastically, 5, 15, then 200 and 400. Now, why? Since all of you are exporters, I will just try to give an perspective. Why export credit is more important. हम लोग जब भी when we start and when हम लोग जब भी बैंक के पास जाते हैं, हमको हमेशा से यही समझ में आता है कि हमको फंडिंग चाहिए. Now अभी फंडिंग अगर चाहिए, अगर मुझे वो फंडिंग ठीक मिल रहा है, but say a normal credit, say CC, charging somewhere in the zone of say 9.5. Compare that with an export credit, where you will be getting at a rate of say around 8.5 with interest subvention of say 2 to 3%, it would be a cheaper. So as a customer also, when you are going to a bank, you should definitely ask for an export credit limit if you are an exporter rather than a normal CC limit. हम लोग बैंकर्स भी बहुत स्मार्ट रहते हैं, हमको भी ज्यादा इसको एक्सपोर्ट को प्रमोट करना नहीं रहता. हम बोलते हैं साहब आप सीसी ले लो, मैं 5 दिन में दे दूंगा. बट एज ए कस्टमर यू शुड बी एजुकेटेड इनफ, यू शुड बी इन्फॉर्म्ड इनफ. क्या होता है सर, आपको अगर नॉर्मल कस्टमर हो और आप बैंक में जा रहे हो, नॉर्मली सीसी आपको मिल जाएगा इजीली, बट वो सीसी किस रेट पे मिलेगा? बैंक देगा आपको 9.5-10% के आसपास. Now you are an exporter and you are going to bank and you are asking for an export credit limit. Now at what rate you will normally be charged? I will tell you that charge would be somewhere in the zone of again 9.5%. समझ लीजिए स्टैंडर्ड ही है. उसमें आप क्या करोगे? इंटरेस्ट सबवेंशन गवर्नमेंट ऑफ इंडिया देता है बैंक को, जो आपका 3% से 2% है, डिपेंडिंग ऑन द MSME. In your case, you have to be an MSME to get it. We call it the interest subvention of government of India. उसमें क्या होता है, आपका जो ब्याज रहेगा उसमें से 3% का गवर्नमेंट ऑफ इंडिया इज पेइंग फॉर यू.
So वो गवर्नमेंट ऑफ इंडिया बैंक को देगा, बैंक अल्टीमेटली विल पास इट ऑन टू यू. तो 9.5% से आप 3% कमा दो, around 6.5 you are getting the rate of interest. In case of an CC you will be charged around 9.5. So आपको ये हमेशा से ध्यान रखना चाहिए, if you are an exporter, you are having your transaction going as an export unit, you should definitely ask for an export credit limit. आप उनके कस्टमर आपके बैंकर को पास जाके बोलो कि सर मुझे पैकिंग क्रेडिट चाहिए, मुझे पोस्ट शिपमेंट चाहिए, मुझे EBT चाहिए, मुझे नेगोशिएट करना है. So this is the one of the biggest advantage of being an exporter and then asking for this export credit limit specifically. और क्या एडवांटेज हो सकता है आपको? पकड़ लीजिए आपने नॉर्मल CC. Why I am giving this comparison? This will give us a clear idea. Why export credit if you are exporter and why not a CC limit? Now जब हम लोग नॉर्मली इंश्योरेंस कराते हैं, हमको क्या मिलता है? मैं अगर एक कस्टमर हूँ, मेरा बायर ने पैसा नहीं दिया है मुझे, क्या मुझे उसका इंश्योरेंस क्लेम मिलेगा इन नॉर्मल केसेस? The answer is no, straight away no. But under ECGC, in case of an exporter, if your buyer is defaulting and you have taken a buyer credit specific to that exporter, you will get benefit out of it, and he will make good the losses your buyer have made by making non-payment of the goods that he has received. So this is available only in case of an exporter where you are taking a buyer credit in an ECGC scheme of things. So ये एडवांटेज भी क्योंकि आप एक्सपोर्टर हो, क्योंकि आपने एक्सपोर्ट क्रेडिट लिया है, इसके वजह से आपको ECGC का इंश्योरेंस लेना पड़ेगा. ऑन दैट केस ओनली यू वुड बी एलिजिबल. इन नॉर्मल CC में ये सब एडवांटेजेस नहीं मिलेगा. आपको बैंक को तभी पैसा मिलेगा जब आपका खाता NPA होगा, बट आपका जब बोरोवर NPA होगा तब आपको कभी पैसा नहीं मिलेगा. बट वो ECGC में और आप अगर एक्सपोर्ट क्रेडिट लिमिट लेते हो तब जरूर मिलेगा. Again, when we deal with foreign customers, we are normally not aware of the things. Like sir has already reiterated, हम लोग क्या करते हैं? हम लोग क्रेडिट रिपोर्ट मंगाते हैं. Suppose you come to Bank of Maharashtra and you say that this customer in China is not known to you that great. आपने कभी उनसे ट्रांजैक्शन स्टार्ट नहीं किया है. So what we piece of say 1500 to 2000, we will get a credit report for that customer जो buyer है आपका, and then you will get an idea whether he is a customer or not, what is his ranking, what is his transaction. You get it for a due diligence of that buyer. जो आज के डेट में इंडिया में अगर आप नॉर्मली किसी के साथ भी ट्रांजेक्शन करते हो अवेलेबल नहीं रहता है. So those sort of services make this transaction easy and seamless and also harmless, because आप क्रेडिट रिपोर्ट वगैरह मंगा रहे हो, किसी के साथ पास जाके आप पूछ रहे हो कि सर ये कंट्री रिस्क इसमें कितना है, ABC किस कैटेगरी में आ रहा है. So वो सारे जो ड्यू डिलिजेंस बैंक करता है ना, वो आपके सेफ्टी के लिए है, आपके भलाई के लिए, आपको इंटरेस्ट सबवेंशन मिल रहा है. So that's why we should choose for a export credit limit rather than a normal credit limit when we are exporting. Any questions?
All the countries in the world are covered under this checking of credit worthiness of the importer.
Sir,
African countries are also.
सर वो चीज है, आपको तो you have to initiate that buyer wise credit. If you are doing that, we would be giving that. We can give you the services. We are there. We have partners who are doing that services. We can do it for any customer, any country.
Supposing I have enough liquidity, that's it. In that case, also it is advisable for me to go for export credit.
Yes, but
credit and use the money somewhere else.
No, this is advisable. This you can do. If you are smart enough, you should definitely use the export credit limit. When we'll have a cup of tea, then I will explain in detail. So I get you from where it is coming. So I can definitely share that. But liquidity है तो सर हमको पैसा क्यों चाहिए? We'll definitely discuss on that. So we will move. Right. Bank of Maharashtra has been expanding its businesses to the length and breadth of India. And presently we are having around 50 specific branches and categorized for doing only export trade transactions, only merchant transactions, only export oriented business in India. Per se bank, Maharashtra we are having 19 of them. So we can understand the penetration we are having in Maharashtra. Anywhere in Maharashtra, Bank of Maharashtra is having direct center. I doubt any other bank is having their services in Bank Maharashtra at least. Plus, what we are doing as a interaction basis, right? We are sending all our existing customers and whoever they are in our list of customers. Every day in the morning, we give them a market sort of write-up. What we are expecting, how the currency would function, how the yield will move. On a daily basis, we are doing it. We call it a market watch, and we do it in a daily basis to all our customers. It's a WhatsApp.
I am very critical. It's really wonderful initiative. There's a WhatsApp group of all the Bank of Maharashtra customers and trading room every morning 9 a.m. They will give you the rupee, what the rupee is there, what dollar is there, what euro is there, what is crude, everything is there.
And at the end of the day, we'll give you a detailed report how market has behaved. So you can get an idea what you are informed and what has happened during the day. And we again top it up on a weekly basis and we make it a weekly dose. So this is how we try to enhance the relationship per se, because हमको आपको हमेशा से informed रखना पड़ेगा, because आप लोग का काम ये नहीं है कि पैसा मुझे कब मिलेगा. That is my job to tell you कि सर अभी डॉलर ऊपर जाने वाला है, नीचे जाने वाला है, you can square off and you can initiate the transaction. It is my responsibility. It is my responsibility to make you informed. आपका काम धंधा करना है और मेरा काम है आपका पैसा बचा. हाँ. I made expenses command. So basically, any product that is there in the market, we can provide only that. External commercial borrowing, since we are not having a foreign run, we are not providing that. Other than that, everything in the umbrella we are providing. Export credit is basically the pre-shipment and post-shipment. Is the time we make shipment, it is called pre-shipment, and the time it is being shipped, we call it as post-shipment. Both can be in INR and foreign currency. So in INR you get subvention, in foreign currency you are not allowed to get subvention because we want to promote INR and export. Now this is a very important slide which I would like to take some time. Now among the PSU banks, we are giving the best rate of interest that any bank can offer at this point of time. We can very proudly say that. You can compare it with any of the banks. Current say rating is AAA. We are giving it at as low as 7.4, and we are giving it with repo. So it is again presently it is 6.5. So this repo rate is driven by RBI on a bi-monthly basis. It changes. Other banks, what they are doing, again I will try to give a reference of other banks and us or other products. आप लोगों को भी उसमें से समझेगा why. Most of the banks, what they are doing, they are taking every T-bill, right? When we reach approach a customer, लोग साहब मेरा तो T-bill से linked है. Now this T-bill link, because I am from Treasury, I can explain. This T-bill, what happens, sir? This T-bill changes every week. It is basically demand and supply. Treasury bill बोलते हैं हम लोग. हर week auction होता है. इसी दिन अगर T-bill rate एक week में आपका बैंक अगर दे रहा है, presently it is somewhere around 7.05 if I am not wrong, for 6-month T-bill will 6-month T-bill. Next week it will again increase or decrease depending on the demand and supply. It is more fluctuating than the repo rate. Now this repo rate, RBI ने अपना policy निकालता है हर 2 साल में. We call it bi-monthly monetary policy, and that is linked with that policy rate. Within that 2 months, the rate will never change. But same is not true for case in case of a T-bill. In T-bill, every week there is an option. Every week supply gap or and it will either increase or decrease. Present scenario is it is increasing like anything. तो हर 2 दिन के जगह पे आपको हर वीक की वो शॉक मिलेगा. आपका बिल अगर बड़ी 1 महीने का है, आपने बैंक को महाराष्ट्र में उसको डिस्काउंट कराया है, तो मैं 2 महीने में एक बार वो रेपो का चेंज करूंगा. बट टी-बिल अगर लिंक है, हर 2 महीने के बाद आप फिर नेक्स्ट टाइम जब जाओगे सर, it might increase also depending on the demand and supply, because it is not fixed. It is changing every week. आप नेक्स्ट टाइम जब आपके कस्टमर आपके ब्रांच से बात होता है फिर डिस्कस करेंगे. So for an unrated customer, किसी का रेटिंग भी नहीं है, my effective rate will be across MSME, Agri, corporate is 8.3%, which is again best in the industry. On top of that, आपको अगर MS आप लोग MSME अगर वो आपको interest subvention मिलेगा -3%. So just imagine the rate of interest that you would be getting if you are an exporter. 8.3 for unrated, you will reduce interest subvention of 3% from that and just find the rate that you are getting. It is very good. So that would answer my research question when we will have a cup of tea and then we will discuss it out. Now, the second thing, these are the rates when you are doing foreign currency. Foreign currency again, we are very competitive in the market. If you are a triple A company, you are adding ARR plus 80 bips. This ARR is again an alternate reference rate for dollar. It is so far. For GBP, it is solely and only and henceforth. और एक चीज हम लोग को हमेशा से टैंकर के साथ टैसल रहता है जैसा मुझे कितना टर्नओवर में मुझे कितना मुझे मिलेगा कितना पैसा टर्म्स में हम लोग काम कर सकते हैं सो दिस इज माय आर डेटा माय जनरल मैनेजर इज हैविंग पावर जैसे चौरसे सर है ही इज हैविंग हिज ओन पावर टू गिव यू दिस रेट बेटर देन दैट सो ये आज के डेट में इंडियन इट इज इन द इंडस्ट्री आपका टर्नओवर अगर पकड़ लीजिए 5 से 10 करोड़ का है पूरे साल भर में आई एम टेलिंग अबाउट एंटायर ईयर we will be charging per transaction only 8 paisa. These private banks, don't want to name them, they are charging, not necessarily you, around 30-40 paisa in per transaction. Just imagine the rate of interest there. They will say that they will be giving you rate of interest of 8%. And when you do the transaction, they will charge you 40 paisa. Just add that cost to your rate of interest and then find out what these people are doing.
Yeah.
That is how.
I will decide to do this.
Yeah, please.
Bank of Maharashtra is still costlier than ICICI Bank.
What is your bank charging you, sir?
So they see here we are all MSMEs. The figures which you have
Sir,
written.
10 crore का turnover का बात कर रहे हैं.
10 crore की करो या 3 crore की करो. See, when we had a meeting, जब ये पीयूष गोयल जी इधर अभय भाई थे मेरे साथ.
अच्छा.
हम लोग इधर बर्ली में होटल में उनका एक मीटिंग था. तभी हमने हमने रेस किया था कि बैंक्स अलग अलग रेट चार्ज करते हैं अलग अलग कस्टमर्स को. हमारा कहना क्या है कि आज की तारीख में गवर्नमेंट ऑफ इंडिया हो या कोई भी आप सबको अगर एक्सपोर्ट बढ़ाना है इफ यू वांट टू ग्रो तो स्मॉलर रिलायंस को चालान उठाने से कुछ फर्क नहीं पड़ता है. वो 5 करोड़ का इनकम फॉरेन करेंसी लेके आता है. आज हम लोग जो छोटे उनको एम्पावर करने की जरूरत है.
What is the expectation?
Sir, we will take a cross and we decide. आज मैं इधर expectation तो मैं बोलूँ मैं 0.5 पैसा दे दूँ. लो पैसा सी. He is getting 2 पैसा from Union Bank. Canara Bank. So we need.
Sir, this is my card rate.
Yeah, but then we need to see today on behalf of FPME, if today you can announce any FPME member approaches Bank of Maharashtra and opens an account with the FPME banner, if you can announce this, it will be a big thing for you and you will get more customers.
Sir, these are what I can announce right now is that, and it goes like this. This is my card rate. Presently, we can match any rate that is given by any bank in India, depending it is adding value to us. So that is our commitment.
You never know. My value is person sitting beside me. He just read my balance sheet and somehow he gave me credit when I was unable to get any credit. He just saw and he gave me a credit. So I go 6 times after his salary.
Very.
So
this can be projection basis also, sir. Not necessarily.
Not necessarily. That's why you need to be very proactive and one-on-one you can discuss.
We will definitely do that. We will request each one of you please reach us to and definitely leave my number and server number already आपके पास अगर नहीं होगा तो सभी शेयर कर देंगे. We are very prone to giving good rates. We are very prone to getting good customers. We are very prone to be competitive in the market. That is what I know.
दूसरा एक इसमें है मैं मेरी फ्रैंक ओपिनियन आज आपको सब हमारे मेंबर्स के सामने बता रहा हूँ. आई एम आल्सो बैंक ऑफ महाराष्ट्र कस्टमर आई एम नॉट टॉकिंग फ्रॉम माय सेल्फ आई एम व्हाट हैपेंस सर आपके ये तो अच्छे रहते हैं बट डीलिंग रूम में ना सर जब हम लोग डायरेक्ट फोन करते हैं ऑनलाइन कर दो ना पूरा जैसे आईसीआईसीआई बैंक में हमारा फिक्स कर दिया उन्होंने हमको सीधा हम लोग ऑनलाइन अभी सर ने बताया कि आप लोग ऑनलाइन ट्रांजैक्शन चालू कर रहे हो. तो बट डीलिंग रूम में क्या होता है जब भी हम कॉल करते हैं व्यक्ति के लिए XC पे हम लोग रेट देखते हैं, ठीक है, सो वी कंपेयर हमको लाइव रेट्स टू एक्सेस की, लेकिन XC पे रेट देते हैं हमेशा। वो लोग XC से 2 पैसा कम ही बोलते हैं और फिर बोलते हैं कि आपका इतना मार्जिन है, आपका इतना ये आप स्पॉट है, ये है, वो है करके हमेशा वो 10 पैसा 12 पैसा लेते ही लेते हैं। सबसे पहले है तो 14 पैसा लेते ही लेते हैं। वो लोगों को आप आई डोंट नो उनका क्या उसमें बेनिफिट होता है, उनको बोलेंगे कुछ तो रहता है, उनका कुछ टारगेट रहेगा, बट देन you need to train them and understand the situation। मैं उनको एक क्वेश्चन पूछता हूँ, यार किसी से हमेशा पैसा नीचे क्यों जाएगा, मतलब कभी ऊपर नहीं जाता आपके पास, फिर वो बोलते चलो ये 2 पैसा मीटर कर लो और करके क्लोज कर।
In normally it is not the practice, sir. Maybe आपका experience unfortunately हमारे साथ ऐसा रहा होगा।
Yes, sir, every time that is the practice।
Okay, next time you can call me before calling them. I will not let them know that you have to call inform. Then maybe we can
You can take lead on idea।
नहीं क्या होता है सर, हमेशा से we would be on the wrong side, that will not happen। There would be days, I don't know whether you have experienced it or not, there has been days we have given the highest, उस दिन का highest जो rate था ना डॉलर का, we had made sure that the customer has received that and हम लोग को उधर भी बोलते हैं। Maybe situation has not come, that may be a reason, but this is my experience, but you have said and I have taken and definitely will do something about this, please। Well taken,
Thank you, thank you।
please Rahul go ahead sir, please।
इनके उसमें था आपने वो फॉरवर्ड ट्रेड का कुछ दिखाया नहीं। फॉरवर्ड कॉन्ट्रैक्ट्स फॉरेक्स, फॉरवर्ड कॉन्ट्रैक्ट का सब्जेक्ट था, इसके ऊपर कोई लाइट नहीं हुई।
नहीं फॉरवर्ड क्यों करते हैं वो तो ये और
क्यों मुझे तो पता है, लेकिन व्हाट आर द सिस्टम फॉर द फॉरवर्ड कॉन्ट्रैक्ट,
go for forward contracts, why we should go for
if you are not naturally hedged, आप लोग अगर एक दो ही मतलब ट्रांजैक्शन कर रहे हो, you are starting a new thing, you should definitely get a forward contract done। even with this interest summation and forward के भी आप पैसा कमा सकते हो, और फॉरवर्ड तो करना है, जैसे प्रीमियम that you would receive, why you want to do that, आप लोगों को करना चाहिए। if I want to keep it simple, अगर आप नए हो, आप लोगों का ज्यादा टर्नओवर नहीं है, you don't want to take that risk at this point of time because you are already very competitive in a competitive industry where margins are very less and you don't want to risk it by the fluctuations, you should definitely get a forward। That is what our question।
but I understand that Gopal lost very amount of money while it trade doing
Sir, when we do it for arbitrage, you know, then this thing happened, and then when we will be discussing things now। Those things happen when we try to be over smart and then make some easy money by doing arbitrage instead of hedging, things like Gopal। but now we are in good shape
after so many years।
after long years they are doing better than ever। Puragi wala sir।
yes
but then it's a business risk, sir. Everything, you also take so much of risk, everything is a risk, sir। just that when the appetite is not, our appetite is not that much to take that risk it, we should always get it forward for the transaction purpose only। once we understand the game plans, we have read the industry, we have read the market, we know, and we are 100% sure कि अभी तो डॉलर टूटने ही वाला है, जैसे वार हो गया, it is not time low again, things are happening like that, then you can take a position, otherwise it is advised should not। business should not be messed around with right word with arbitration and अपना business में बहुत पैसा है सर हमारे, ये सब नहीं करेंगे तो
nicely said, thank you very much।
so this is basically the initiative like exporter which we are doing because
एक point missing है,
please sir।
आपने convenience की वो slide निकाल दिया, आपने इंटरबैंक रेट डाला है, इंटरेस्ट रेट डाला है, लेकिन बैंकिंग चार्जेस नहीं डाला।
सर चार्जेस में क्या होता है सर, उसमें there are many things, there are many things to discuss on charges and there are it is again customer specific। तो मैं अगर फोरम में बोलूं my charges are there in the portal only sir,
but then they are still higher। every transaction, see as an exporter we have, अगर फॉरेन करेंसी रहता है उसके पर चार्ज रहता है, फिर वो बिल लॉन्च करते हैं उसके पर चार्ज रहता है, बिल रियलाइजेशन करते हैं उसके पर चार्ज। एवरी
सर कौन सा मैं करनी है वो मुझे पता है, I will definitely return।
no, see that's what I'm saying, again ICICI 100 rupees per transaction standard, नो कोई टर्न और लिमिट नहीं, कुछ नहीं, ऐसे करो आप, करो बिल्कुल धंधा करो। आप वो चार्जेस के पर ध्यान मत दो, आप मार्जिन पे ध्यान दो, जैसे आपने अभी बताया ना, तो वो आप छोड़ दो चिंता, वो हमारे पे छोड़ दो। 100 रुपीज पर ट्रांजेक्शन कितना आज कम्पिटिटिव हुआ है। हमने जो मीटिंग में यूजुअल आपसे उनके साथ रखा था, तब उन्होंने एक स्टेटमेंट दिया था कि जो रेट फॉरेन करेंसी का रेट जो 0.50 पैसा जो रेट हमारी को मिलता है वो मेरे एमएसएमई को मिलना चाहिए। जो बैंक चार्जेस आप रिलायंस को लगाते हो वो हमारे एमएसएमई को मिलना चाहिए। तो हमारा कहना ये एक स्टैंडर्ड, और हम लोगों ने एक डिमांड डाला था, उन्होंने बोला था कि इंडियन बैंकिंग एसोसिएशन के साथ मीटिंग करो और उनके साथ ही डिमांड करो। हमारा एजेंडा है, हम लोग जाएंगे इंडियन बैंकिंग एसोसिएशन के पास, क्यों ना एक एक्सपोर्टर के लिए स्टैंडर्ड चार्जेस।
एक और चीज आपने पीयूष गोयल सर का नाम लिया है, तो मैं ऐड करना चाहूंगा। पीयूष गोयल सर देयर वाज अ मीटिंग विद all the top bank executives of MD level and Ministry of Commerce, which was chaired by Honorable Mr. Shri Piyush Goyal. उसमें यही चीज उन्होंने किया भी है, they have implemented and it is going to be rolled out shortly. So this rate of interest double A we are seeing, right? You are seeing that double A rate of interest. Basically, the rate is steady that it's an agencies or bank internally. So what Piyush Goyal sir is saying is that if you are taking a guarantee coverage from ECGC and paying 0.05 extra premium for that, you can get this rate of interest eligible for double A and above for any customer in India. Specifically for MSME, he has made it a mandate. It is being rolled out in most of the banks. We have already moved the process and we will definitely.
I am not qualified for double A now.
Yes. अगर हम लोग as and when we get it approved, we have initiated the process. No. It's a bank, sir. Nothing like that. Few of the bank has already given the approval, and more or less most of us will be doing that. So in time to come, maybe a month or so, most of the banks will do it, but Bank of Maharashtra will be one of the first few banks to do it. Definitely. So all your MSMEs will be getting this surcharges presently.
So one more point I will just discuss in short. Sri Lanka, many people are doing export, and Sri Lanka there is a lot of import going on from Sri Lanka under Indian credit line. The Indian credit line is against LC, but the payment, although the LC is that side, the payment takes 60 to 70 days because of the process which goes to embassy, Ministry of External Affairs, SBI, GIFT City, and then comes in India. So during that time, we need a credit requirement. Bank of Maharashtra should take that initiative and as they decide will cost discount credit.
It is a challenge which most of the companies like I don't know whether are facing.
So the paper solution is the
We will discuss. We will definitely get on discussion. It is a problem है.
दूसरा I don't know, again, since I'm a Bank of Maharashtra customer, I can talk on that. बहुत सारे लोगों के साथ ऐसा होगा नहीं होगा. We as an exporter, we deal in many African countries where we get in some tenders, we require bank guarantees. Many of the banks don't provide, including Bank of Maharashtra, don't provide direct bank guarantees. We have to depend upon the so please work on that. We have written this to Minister of Finance, Minister of Commerce, also on behalf of the PME. There should be some mechanism where MSME can get bank bid bond guarantee. In many countries, there are insurance companies, they are giving the bid bond guarantee or performance guarantee. But we are in India, there is a IRDA regulation which is restricting that. So we are not able to get from insurance companies. At least bank should come, or easy, anyone can come out and plan that.
Well, anything else? Anything? So thank you for your patience hearing and questions. Thank you so much.
Thank you very much, Rupesh. Thank you very much. Hope this will be fruitful on both.
Yes.
Both